could you kind of elaborate on this notion that most of your investments, when you're in this sort of options, 250 to get one that might be a big bet, how do you keep people focused on the fact that what we're after here is a contained investment for kind of a massive opportunity of return, and that very few opportunities are going to really pass through that judgment?
So it's again the portfolio approach, right? So we really need to make sure that the leadership is not looking at a project per se, but is looking at the return on portfolio.
Yeah,
so
that's an important point.
And that's not obvious, right? Because as you've said, in the execution side, on the execution side, you give money for a project and the project needs to succeed. Mm-hmm. Otherwise you fail and you fail your career. Mm-hmm. Now over here, it's actually, take the pharmaceutical industry. There are a lot of scientists who never find a molecule, right? But they're part of the success, because if they don't search, you're not going to have that. And the ratio is a lot bigger there, right? You won't have that one success. So you need to look at the return on the portfolio and have a very good system to weed out. So really, at every stage, how you're going to kill projects. And if you do that well, and this is where Bosch, again, to mention one public example, is pretty impressive, because the teams themselves know that they shouldn't get follow-up investment. So there's a 90% overlap between what the team thinks, should we get follow-up investment, and what the leadership thinks. Okay. 90% overlap, because they know exactly what evidence do they need to have at each stage. So it's really interesting. The metrics completely change, and that's a big challenge. So with even a couple of corporations, we had this consortium where we looked at innovation metrics. How do innovation metrics, so reducing risk and uncertainty, the return on the portfolio, et cetera, how does that change compared to the execution metrics? And that's where I also like your imagination premium. If we can't put a value on the portfolio of exploration that a company has, we're always just going to look at the execution part. It's almost like we need to analyze the two parts of the company. Yeah, today, the analysts, they're only looking at one part of the company. And that's why it's much easier for companies today to just acquire, because nobody's valuing their innovation portfolio. This is actually one of the biggest concerns of many CEOs. They say, for acquisitions, I have a checklist. I have lawyers. And the stock market knows exactly how to deal with that. Over here, on the left, I have a black box. Nobody really knows how it works in my management team. And the stock market doesn't know how to value that. So I can only get it wrong. So obviously, you're going to hedge your bets. So until we figure out how to really look at that part more systematically, nobody's ever going to really value it. And only the very courageous CEOs are going to push on to actually build something like that.